You're listening to Uranium Spotlight on Tuesday, May 27, 2025. Brought to you by Purepoint Uranium Group, your exploration partner in the most prolific areas of Canada's Athabasca Basin. With a collaborative investment model on district-scale projects and validation from industry leaders Cameco, Orano, and ISO Energy, Purepoint is investing in Canada's uranium future. And now your host, Chris Frostad.
This week on Uranium Spotlight, Trump jolts the uranium market. 2024 production numbers are in, and a Canadian explorer keeps up the pace. The uranium spot price closed the week at $71.10 a pound, continuing a quiet but persistent climb that reflects the growing tension between tightening supply and long-term demand certainty. Even without major headline moves, this kind of gradual strength is often a sign of a healthy, maturing market, not a speculative spike, but a firming floor. One of the more interesting dynamics right now is how utilities are managing their procurement strategies. Many are shifting towards a blend of long-term and mid-term contracts while still keeping an eye on spot opportunities. But with fewer pounds freely available in the near term, buyers are increasingly competing for smaller volumes, and that competition is putting subtle upward pressure on prices. At the same time, supply-side developments remain slow. While a few producers have restarted or ramped up operations, delays, cost inflation, and permitting timelines continue to weigh on the broader supply response. That's forcing many fuel buyers to reassess the timelines they once relied on, and to build more flexibility and security into their portfolios. Another point to watch, market discipline. Sellers are holding firm, maintaining wide bid-ask spreads and showing no urgency to offload material at discounts. This kind of price stability in the face of low volumes suggests confidence, not desperation, on the supply side. In short, uranium continues to edge higher, not through volatility, but through resilience, a slow tightening that reflects real fundamentals, not just market noise. If you haven't already, be sure to subscribe to Uranium Spotlight podcast, available on your favorite podcast platform or on Purepoint Uranium's YouTube channel. Donald Trump wants to reestablish the United States as a global uranium powerhouse. He's pushing for aggressive policies aimed at reviving domestic mining and processing, part of a broader plan he calls American energy dominance. It's not just political posturing. His administration has already issued executive orders fast-tracking mine permits, designating uranium as a critical mineral, and floating the idea of import tariffs, even on uranium from allies like Canada. Here's the problem. The U.S. uranium industry is a shadow of what it once was. Back in the Cold War era, it led global production. Today, it's mostly idled. Fewer than a dozen uranium facilities remain active, and the country employs just a few hundred people in the sector. That's in stark contrast to its energy needs. America's fleet of 94 operating nuclear reactors is the world's largest, and they consume vast amounts of uranium every year. To meet that need, the U.S. depends heavily on imports from Russia, Kazakhstan, and Uzbekistan, but also from Canada, which supplies some of the highest-grade uranium on Earth. In fact, the Athabasca Basin in Saskatchewan is unmatched globally, with ore grades up to 20% U3O8. That compares to a global average of about 0.1%. But Trump's trade-first approach has created a wave of uncertainty. Tariff threats, even if not implemented, rattle markets. His administration has asked the Commerce Department to study the national security risks of foreign uranium and to consider import restrictions, including from Canada. That's prompted uranium equities to bounce on headlines, but the longer-term concern is real. Cameco, Canada's largest uranium producer, has responded with measured calm. CEO Tim Gitzel recently told investors these policies are a distraction and reiterated a core truth. There is no substitute for uranium in nuclear fuel and no elasticity in its demand. If you run reactors, you need uranium, regardless of where it comes from or what it costs. Still, there's reason for vigilance. Even back in 2019, when milder trade restrictions were proposed, Cameco warned they were too broad and based on unrealistic assumptions about how quickly and how much uranium U.S. mines could produce. And not much has changed. Restarting idled mines can take 2 to 5 years. Building new processing and enrichment infrastructure, that's a decade-long process at best. The irony is this. Even as Trump pushes to reduce dependence on foreign uranium, there's talk that he might ease sanctions on Russian imports. That would flood the market with low-cost supply while making life harder for Western producers, including Canadian companies. If that happens while tariffs are imposed on Canadian uranium, it could distort the market even further, adding downward pressure on prices while limiting access to America's biggest trading partner. So what's the takeaway? For uranium equity investors, this could be a critical inflection point. Canada remains one of the safest, most geopolitically stable, and geologically superior sources of uranium anywhere in the world. Utilities seeking long-term security of supply are already turning back to the Athabasca Basin. As a global demand continues to outpace new production, the need for credible, high-grade projects becomes increasingly urgent. Yes, U.S. policy may inject volatility, but in resource markets, volatility creates opportunity. Investors who position early in quality Canadian names stand to benefit as contracting accelerates and supply constraints tighten. While others watch the headlines, smart capital is looking at the fundamentals, and right now they strongly favor Canada. Global uranium production in 2024 reached 157 million pounds of U3O8, up 15 million pounds from the year before. That 10% increase came primarily from three countries: Kazakhstan, Canada, and Namibia. In Canada, Cameco continued ramping up production at its flagship assets, Cigar Lake and McArthur River. Kazakhstan's Kazatomprom also boosted output from several of its in-situ recovery operations, and Namibia contributed to the gain with the successful restart of Paladin's Langer Heinrich mine. This data comes from industry consultancy UXC, which had forecast 2024 production would land somewhere between 153 and 158 million pounds, so the final number hit the upper end of expectations. Kazakhstan led the world again in volume, producing 60 million pounds, or 39% of global supply. That's a 10% increase over 2023's total of 54.9 million pounds. While many of its ISR operations posted steady growth, there were some headwinds, including regulatory hurdles and ongoing shortages of sulfuric acid, which is critical in in-situ uranium extraction. For 2025, Kazakh production is expected to rise further, with projections between 65 and 68 million pounds. Canada followed with 37 million pounds of U3O8, representing 24% of global output. All of that came in just two mines: Cigar Lake, which delivered 16.9 million pounds in 2024 and is expected to reach 18 million pounds in 2025, and McArthur River, which set a new benchmark with 20 million pounds produced. Meanwhile, Namibia's production outlook for 2025 is more uncertain. Heavy rains in the region are expected to constrain output at Langer Heinrich after a strong contribution in 2024. While supply has stepped up, demand continues to outpace it. UXC estimates total uranium demand for 2024, including inventory restocking and secondary sources, at 191 million pounds. That left a 41 million pound shortfall, which had to be met from secondary supplies and inventory drawdowns. The takeaway here is clear: global uranium demand remains inelastic and steadily rising, while supply, despite recent gains, continues to face structural and operational challenges. From weather disruptions in Namibia to chemical shortages in Kazakhstan, the market remains tight, and that's a dynamic every investor in uranium equities should be watching closely. Purepoint Uranium is officially mobilized for its summer drill program at the Dorado project, part of its 50-50 joint venture with IsoEnergy, right in the heart of Saskatchewan's eastern Athabasca Basin. Drilling kicks off May 26th with 5,400 meters across 18 holes targeting high-priority EM conductors that cut through the Dorado graphitic domain. This is the same conductive trend that hosts IsoEnergy's Hurricane deposit, the world's highest-grade indicated uranium resource at over 34% U3O8. Initial drilling will focus on the Q2 conductor, northeast of two historic holes that intersected notable mineralization. This area sits near a granitic dome, believed to have once focused the uranium-bearing hydrothermal fluids, an ideal setting for potential high-grade mineralization. With shallow unconformity depths and proven structural corridors, Dorado is primed for efficient and impactful drilling. Meanwhile, Purepoint has wrapped up its initial three-hole drill program at Smart Lake, its joint venture with Cameco. This tested the newly outlined Grooms Lake conductor, part of the broader Beatty River fault system. While no mineralization was intersected this round, all holes hit graphitic shear zones and significant structural deformation. The central EM conductor is now considered a top-tier target for follow-up drilling, particularly where it meets the unconformity. Both programs underscore Purepoint's focus strategy: drill high-probability targets in world-class settings alongside some of the biggest names in uranium. With 6 active joint ventures advancing on parallel tracks, this explorer remains firmly positioned at the forefront of discovery potential in the basin. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by Purepoint Uranium Group. Purepoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with industry leaders. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.